Hey folks, welcome back to the channel. This is Jason, certified financial planner and host of Fighting Words Financial. And today I'm going to be switching gears a little bit here. Most of the foreign companies that I talk about are generally Chinese EV makers because that's what interests me. But I wanted to talk a little bit about something different today. And I want to talk about a company that's outside of that space that I cover most of the time. And mostly because this has been mentioned a couple of times in my Patreon discussions. And I think this company is worth a look. This is a company whose stock price has increased by 350% or more in the last 14 months alone. There is a little bit of worry, of course, as to whether or not you might be late to the investing game. I'll let you be the judge of that, as I respect the intelligence of my audience. Now, you may not have heard of this company, but if I had to take a guess, I'd say that this Singaporean company is going to become a lot more familiar over the next decade. The company in question here is Sea Ltd. It trades under the symbol SE, and in this video I'm going to be breaking down who they are and what they do in order to give you all the information you need to come to your own informed conclusions. So without further ado, let's dive right into it. Sea Ltd. was founded in 2009 by entrepreneur Forrest Li. Sea Ltd. is a huge internet and e-commerce firm operating out of Southeast Asia. The company initially began life providing services for video gamers to communicate with one another. The first product they ever launched was an online portal that allowed users to interact digitally, and this became an instant success. Sea Ltd. used this success as a jumping off point and began expanding in all directions in the video game industry, culminating in the release of the super popular Free Fire mobile game. In fact, Free Fire went on to become the most downloaded mobile game in the world in 2019. Pretty impressive, right? However, Sea Ltd. didn't stop there. Instead of confining themselves to one sector, they pivoted and began exploring other opportunities. The company actually followed a pretty similar path to the Chinese conglomerate Tencent, in the sense that they used their initial success in the realm of video games to expand into other markets. By the way, if you'd like to learn a little bit more about the Chinese conglomerate Tencent, feel free to check out the video I did on them recently. I'll leave a link in the description. After their initial successes in the realm of video games, the market that Sea Ltd. chose to focus on was e-commerce. The company used the proceeds from their successful video game branch to create and launch its own e-commerce platform called Shopee. Shopee was launched in 2015 and was originally targeted at consumers in Southeast Asia. However, over the years, Shopee has pretty much adopted a hybrid business model whereby they target both consumers and businesses. So the best way to think of Shopee, and I know this is a tired comparison because everything seems to be the Amazon of wherever you are, but you really should sort of think of Shopee as the Amazon of Southeast Asia. The platform basically functions as an online marketplace for users to buy, well, pretty much anything. Since its launch, Shopee has exploded in popularity and has become the #1 e-commerce platform in all of Southeast Asia, and was also the most downloaded app in the region for 2019. So what is Sea Ltd. Up to these days, and why am I so excited about them? One of the real admirable things about Sea Ltd. is that they didn't rest on their laurels after the success of Shopee. Instead, management made an intelligent decision to branch out again, this time into the realm of digital financial services. Titled Sea Money, this area of Sea Ltd.'s operations is making waves throughout Southeast Asia. No pun intended, of course. Currently, the leading digital payments and financial services provider in that entire region, Sea Money provides digital wallets, payment processing, lines of credit, and other financial services. The cool thing is that Sea Money integrates seamlessly with Shopee and Sea Ltd.'s video game arm, meaning that the whole company sort of flows from one branch to another. It's hard to underestimate just how big Sea Money could be. The volume of digital payments is expected to grow by about 12% each year between now and 2025. Combine this with the fact that around 655 million people reside in Southeast Asia, and it's clear just how big of an opportunity Sea Money has here. Even though Sea Money was only launched a year ago, this branch of Sea Ltd.'s operations has already generated over $60 million in revenue for the company. You can really look at Sea Ltd. in a lot of ways, not just an e-commerce company, but also a fintech company. And as you've probably already guessed by now, Sea Ltd. has taken this success and innovated yet again. A few months back, Sea Ltd. acquired the Hong Kong-based hedge fund Composite Capital Management. Together with the fund's managing partner, David Ma, Sea Ltd. has launched yet another addition to their business called Sea Capital. This branch of the company aims to raise around $1 billion over the next few years in order to invest in various tech startups all around the region of Southeast Asia. Through this support, Sea Capital hopes to boost the entire ecosystem, which will inevitably help Sea Ltd as a whole in the long run. Pretty smart, right? And in a lot of ways, they're following the blueprint of Tencent. What does this mean for the future of this stock, though? Now, as I mentioned at the beginning of this video, Sea Ltd stock price has skyrocketed over the last year and is currently sitting right around $320 a share. This is pretty remarkable considering that it was sitting at about $50 a share 14 or 15 months ago. The rise of Sea Ltd's share price can be attributed to many factors, but mostly it's attributed to the company's rapid expansion into different sectors, at the same time. Looking at the revenues, the company made $4.4 billion in 2020, which was more than double the revenues they had in the previous year. So they have tremendous revenue growth here. And I think that this is pretty remarkable growth considering the impact that the coronavirus pandemic had on logistics and related areas. Gross profit for 2020 totaled $1.3 billion, representing a 123% rise over 2019 figures. Notably, Sea Ltd's executives stated in a recent earnings report that they expected revenue from e-commerce, that branch of the operations, to be somewhere between $4.5 billion and $4.7 billion for 2021. This would represent an increase of around 112% over 2020. All in all, these figures serve to highlight just how fast this company is growing and how it's exciting news for potential investors. Fair warning though, Sea Ltd's stock price is close to or at an all-time high and is trading at around $320 a share. So I'm going to leave the determination as to whether or not this company is fully valued up to you as the investor. And I guess this would be a good time to disclose that I don't actually have a position in this stock, but I am thinking about initiating one. So overall though, these are my thoughts on Sea Ltd. Firstly, I admire how innovative they are. Much like Tencent, they don't seem to get too comfortable into one sector and use any success they have in one sector to expand into another one, thereby increasing profits. I think that this business model is going to be fundamental to the company's future success. Secondly, I find it remarkable how fast this company is growing. Doubling revenue year on year is no mean feat, especially with the uncertainty of the markets over the last couple of years. Thirdly, this is a pretty solid way to diversify internationally into Asia without having to deal with all of the anxieties of being invested in a company that's based in China. I'm going to be honest though, and remember this is just my opinion, Sea Ltd really does excite me as an investing opportunity. All things considered, they're still in a growth phase, and I do think that their stock price is low for the moment compared to where it could be a few years from now. However, this is just my humble opinion, and you have to do your own due diligence. And remember, folks, don't invest more than you can afford to lose. As always, guys, I appreciate you tuning into this video. If you could take 2 seconds to like this video, give it a thumbs up. I greatly appreciate it. It helps with the YouTube algorithm. Also, if you'd like to hang out with the folks in my Patreon group who are very intelligent and can help you get your investment knowledge to that next level, check out my Patreon. It's only $5 a month. And finally, thank you once again. Please comment below on how much you like this company or how much you think it sucks, and I'll see you guys next time.